Hey guys, it's Alvin here. We have a very special video. We have Chris Lopez, who often appears on platforms like Bigger Pockets, among others, talking about portfolio management strategies. We're going to hear his personal story of how he was able to 10x his return by tapping into 200K in equity using a 1031 exchange. If you find this video helpful, hit the like button, hit subscribe. Now let's get going. Chris, thanks for joining us today. For our audience who doesn't know your background, do you mind sharing us your story?
Sure. So my name is Chris Lopez and I live in Denver, Colorado. So I started real estate investing in 2011. I got very lucky in buying after the crash and the very early stages of recovery. Didn't know at the time, but that's when I got started real estate investing. And then after a couple years of investing, I did one or two deals. I got bit by the real estate bug and decided to go out there and, I wanted to become a full-time professional. I did a fix and flip, made money, hated it. I was a one and done guy. I then tried wholesaling, did not make money, joined multifamily brokerage for a little bit, wasn't my cup of tea for cold calling all day, and eventually found my groove in becoming a residential investment broker in like 1 to 4 unit properties here in Denver, Colorado. Great market, great time. And I like that aspect because it was not about quick money, but hey, how can I buy an asset for 4, 5, 6, 7 years and build wealth with a high probability in the long run with real estate? What happened was, as an investor, I was analyzing my very first property about in 2011, 0% down, the book case study, creative strategy. But now I was sitting on $200,000 of equity and the property was cash flowing $150 a month. And I was like, well, I'm rich on paper, or back then rich on paper, but no cash flow. And one of my mentors taught me about the power of, hey, optimizing the property and then trading up your rental portfolio, like a cash out refi or 1031 trade up. And that just like unlocked the new level of matrix for me. So went on from there and just built more portfolio, or got more properties. I really focused on how can I utilize my equity to just 4x, 5x my growth versus creative deals, or we all have limited capital. And so fast forward today, I've been investing since then and have really carved out a good niche in doing a lot of deals here in Colorado personally for my portfolio, but I've expanded out on these like return on equity concepts where I get to come around and collaborate with other people. I'm a lot of times a featured speaker at Bigger Pockets conferences or on their YouTube channel, often talking about these advanced wealth building techniques. And that's kind of been the niche I've fallen into for helping people understand, hey, how do you take all this equity that looks great on paper, but how do you turn that into cash flow and more growth for you?
And a big part of that is maximizing what the market's offering you. So right now the market has changed. What worked 3 years ago no longer works today. Interest rates are a lot higher. It's harder to anticipate, much more appreciation. We don't know what rents are going to do, right? So we may have to just stay the course for a while. And what we found by analyzing different opportunities is that new construction and secondary markets, particularly when you're getting the rate buy down from the builder, is the best path of finding good deals that still cash flow. What have you been seeing?
I very much agree with that. The two main deals that I see here in Denver and trends people are following is, Denver and Colorado, it's no longer a cash flow market. It's very similar to, California now, just a high appreciation market. But there are deals for, a lot of times like, I'll say young single operators who are going out there and, hey, they buy a 5-bedroom house, add 3 bedrooms and do room by room rentals. Amazing cash flow, but it's hard to do if you're, I'm in my 40s with a wife and 3 kids. Hard for me to do that. And then there's a lot more opportunities now where other investors, they are actually going out of state from Colorado and other high appreciation markets to exactly go out there and go into better rental markets. And I totally agree with your analysis, Alvin. I found the same thing in that like the new build opportunity is like, I think one of the best plays out to the marketplace right now, unless you're willing to go out there and be like a 40-hour hands-on, operator. I see the same numbers now in those out-of-state build to rents that we saw 3+ years ago with that trade up in Denver. So I totally agree with your analysis.
Yeah, and you make a good point, right? There's a difference between an active investor or a passive investor. If you're an active investor, you are inherently stubborn. and you're going to try to find a deal and make it work with your own two hands if you have to. But most investors, they want a little bit of passivity. It's actually the number one reasons of getting into real estate is eventually retire and live on a beach somewhere, right? Supposedly. But the whole idea is that there should be a better way. And a lot of investors are now looking at other strategies. So what you did is when you analyzed your clients and your own portfolio, is you were able to figure out like, hey, is there a better return on equity? Can you kind of educate us a little bit about those tools that you use and what you're looking for when you're analyzing those tools?
Sure. So, I mean, if anyone who comes join us for our webinar here soon, we're actually going to do a deep dive into these topics and actually use a software tool that we actually built with two partners. Years ago, I had tons of spreadsheets that I built to analyze return equity and optimize people's portfolios. And spreadsheets are great until someone breaks it, and then you're trying to figure out what to do. So there is so much opportunity and need there. We actually invested $1 million+ into make a piece of software that helps people not analyze a buy side deal, but analyze your current portfolio. How do you understand the returns? And then how do you go out there and then essentially rebalance your portfolio, right? Our stock markets automatically rebalance. Real estate, there's no auto reinvesting of cash flow and no auto rebalancing. And in real estate, we have high transaction cost. Hey, making a move, it's big, so let's make sure it's right. So we built this tool to go out there and help people analyze their current property performance. The big mindset shift I went through and many investors go through is we all think in return on investment. Hey, I invested $100,000 of property in 2015. Well, now I'm making $10,000 a year in cash flow, divide by $100,000 investment 7 years ago, I'm making a 10% cash on cash return. No, it doesn't work that way. And my analogy is I go out there and buy a new pair of pants. My pants and the tailor don't care how my 30-year-old body versus my 40-year-old dad body worked, right? And so it's the same thing with real estate. We have to look, hey, how are we measuring the performance in today's numbers? And so what happens with your investment is, hey, you invest $100,000, but over those years, you get market appreciation. And for a lot of us, it's 2 or 3x the last 10 years. You'll get some principal reduction or principal pay down as you pay off the mortgage. And if you added value to the property, that increases as well. So now, rather than return on investment, you look at your return on equity. Now, when you look at $10,000 in cash flow over a $500,000 equity position, that's not a very good cash on equity return or a very good cash flow in general. I can take $500,000 in T-bills right now and way outperform that a lot of these rentals right now that people sit on.
Yeah, return on equity is such a powerful number to utilize, and I always view equity as if it's casino chips, right? Where you go to a casino and get a bunch of chips, and it's like that's great, but I can't buy anything from a vending machine with this casino chip. You have to cash it in. And so when you cash it in is when it becomes usable again, right? If it stays casino chips, if it stays in your equity, it just makes you feel comfortable at night, but that's about it. There's no really, the return on equity is always zero every single time. And so I had a chance to actually use the tool myself. I plugged in my own properties and I analyzed my own performance. And what I realized is I was very heavy on appreciation. And in the market right now, I can't bank on appreciation. It may or may not be there. But what I was short of was actually cash flow. So when I was analyzing my own portfolio, I realized I'm adding up my number of doors, but the amount that I'm bringing in every single month is lower because I was chasing appreciation as opposed to chasing cash flow. So for the sake of balancing my own portfolio, I had to get some deals that maybe aren't in very attractive markets, maybe are not going to appreciate very well, but they're stable, they're long-term plays, and they cash flow great today. So I know that you also made some changes in your portfolio. Can you kind of walk us through what you did?
Yeah, so I did the same thing. I've actually divested quite a bit of my portfolio into going into some bigger projects here in Colorado, with some partnerships and things like that, and then also some out of state as well for the exact same reasons you talked about, for just better cash flow and better yield. Put it simply, this is what I tell my investors is the easy days of investing in Colorado and many markets like Salt Lake City and Austin and a lot of other markets like Denver has been, they're over. We had this epic appreciation and rent growth, but the law of averages are kicking in now where, we've had double digit appreciation for years. Our historic average here is 6%. And now we've been averaging 2% the last 3 years. And so the law of averages is kicking in. So I realized that. And so I have sold off a lot of my properties to reinvest into better assets. But the second thing as well is to re-up on leverage, and that's the other key piece for like really keeping your portfolio clean. In my opinion, owning like a paid off or low leverage piece of a single family home is often going to actually be below stock market returns. Why deal with the risk if I'm getting stock market returns? So I want to re-up my portfolio leverage in that 60 to 75% LTV area. So I got into better deals and re-leveraged up so I could be optimizing my growth and cash flow.
Yeah, you and I are both very passionate about the benefits of studying your portfolio and not analyzing the best deals available and ultimately making an educated decision. And we've talked to a lot of investors about how to best find the ways to maximize your portfolio. And you and I decided to get together and actually create a training session where we could help guide clients through this process. And we also are going to give them the same tools that we're using to analyze our own deals. Chris, can you tell us more about this event?
Yeah, so this is an event I've actually been doing for the last 4 years. I do it once a year with like my group of investors in Colorado for my own portfolio, my investors here. And then every year we make it bigger and better. And the whole idea here is to educate people on, hey, understand these key wealth building metrics, return on equity versus return on investment, and then understand how your portfolio is currently performing. And then, hey, recalibrate what your goals are. Like when I started real estate investing over almost 15 years ago, I was single. Well, now I'm married with kids, a lot busier, right? So my goals have changed, and I've got a lot more colleges and weddings to pay for now than I ever imagined. So I got to readjust my goals and also readjust my time. So it helps people understand that and say, hey, now that you understand what you're sitting at, let's go out and look at different opportunities in the marketplace. One of them being, these build to rents, like they're an amazing opportunity right in the marketplace. Hey, let's model, hey, if you were to sell this property and do a 1031 exchange, what's that do to the numbers? How does that look? And so we give people some ideas on different options out there so they can start saying, oh, if I did this, I get these types of returns. So we couple the education, market opportunities, and also a really cool thing that Alvin and his team are doing is we're going to be doing some like small group masterminds out here as well to either chat with people one-on-one or work in some small groups to help hear other investors and also get another opinion on your portfolio and options. Because, hey, if you sell a property and buy a new property, that's a big financial move. Go in there eyes wide open, go in there and make sure you've played devil's advocate and you're making a right decision for you. And that's the whole goal of this program. Understand how it's performing today, understand what opportunities are out there in the marketplace, and then go make the best decision for your portfolio.
So if you want more information about the event, we're going to have the links below or above, depending on what platform you're watching this on. But that's the best way to reach out. You can also direct message us directly. We'll be more than happy to reply. I think it's going to be a phenomenal event for all of our investors, and I can't wait to see you there.
Thanks so much, Alvin. I'm excited to be part of it. Anyone out there, amazing opportunity. Big shout out to Build to Rent, who's putting on, investing time and money to make it all happen. It's a really cool opportunity for people out there. So thank you for having me.
Hey guys, now I want to hear from you. What are your thoughts? What are your opinions? Do you have any trapped equity? And if so, how do you plan on using that equity? I want to hear from you directly. I will be responding to every comment below. And don't forget to subscribe, hit that like button, and I will see you all next time.